Hello everyone, Jesse Webb, Traders Pro. Market conditions are accelerating to the downside here. We're still in this bearish and this bull market. That's going to be the case probably for the next few days unless we see a real sharp move higher. This bull market, this overall uptrend, we're towards the upper end of that range and moving back into a retracement against that overall uptrend. And from the October lows in S&P 500 to where we're at now, you can kind of see where that pullback is at this location. I'm going to pull in another chart here, but we'll look at this support area on S&P 500. We're seeing momentum really accelerate. We're now at the extreme level on momentum. Several other charts showing extremes now. So we may be getting close to some support at these locations, and we'll look at some individual stocks here as well. Momentum, again, moving down significantly. Breadth also starting to tick back down. Sentiment moved a little bit here, and that also is, we're seeing some real escalation here in the movement. Futures are down 30 points or so again this morning. Buy-sell ratio has really been popping here. We're now back up in these levels where these are a little bit more common. So I think the market's kind of coming to life here, waking up. It's that season as well. August, September, October, even into December, we certainly start to see a little bit more activity now that summer is over. So we've got, really some, it's going to be some work now, because typically we see that expansion when it's this far up. We'll see a counter trend move back up, but I don't think this is it for downtrend currently. We are approaching that extreme range now. What are we at on sentiment here? We're sitting right at 15. This can bottom out. This was 13. This was 12. That was 13, 16. So at least in this last year, we haven't quite reached those extremes. It can drop all the way to underneath 10 if we're really getting ugly. But we're at locations now where we want to start paying attention, not necessarily fearing at this point and starting to bail. We wanted to be doing that back up here. We now want to start to be looking for some support areas and seeing what's going to be able to hold up right here. If we take a look at S&P 500, and you can see we just have slid right through that 382, or excuse me, the 236 momentum zone up here. We want to continue to see a stock or a market finding support at this range. So it's been sliding through that. It looks like we're going to be retesting this 429 level on SPY, and that's going to take us back potentially to this support area where we've got this high and this low. And if not, we could push a little bit lower. We're now at the extreme in terms of momentum, negative 170. That can go a lot lower. That can get, down into the negative 200s if we continue to see some sliding here. But again, that long-term trend is up. So all of these levels are potential support areas. As they fail, then obviously the trend is reversing, but we're at the top of this long-term trend. Back to a 382 retracement area is a retracement zone. We want to keep this as the momentum location. That's what we want. Things are support, moving in the overall uptrend. Once that starts to break, then we get into this zone, which is retracement zone. And then we're looking for support to continue the trend higher at anywhere inside of these three ranges, here, and here. We're now watching for support areas. And again, they will become now supply demand zones. We're going to get a new demand zone here for buying, a counter trend back up. This is going to be a supply zone or resistance location on SPY. So keep an eye on those locations. I'm just on a 6-month chart setting with the fib tool, this fib snap tool attached. If we take a look at some stocks, and again, remember that in these market conditions, bearish bias, raising stops on winners, selling losers. I wouldn't be adding anything aggressively. Aggressive traders looking for a downside using put options. I think we're past that point right here. We may get another move today and be watching for some support areas, and then a counter trend back up. As I talked about on that S&P 500, if we bounce right here and then we counter trend back up to this zone. This would be a better location to set up any new bearish trades or exit out of any bullish trades that you may want to at this point, not selling into the fear. We don't want to sell into the fear. We want to wait for it to counter trend back up and bounce, which it almost always does, right? Unless we really see some sliding and there's some kind of news item or something nasty that ends up popping up here. If we look at the current muscle stock trends, we've got some tankers coming in here, shipping stocks. Let me just refresh that page for you, and we go back here to muscle stocks and the new buy list. I'll come back to that stock because it's actually interesting. This is one of the big movers here, TNK. So TNK, still not in a really nice looking uptrend, but it is working that direction. It's now got that signal. If I change back here, you can see it's working its way back up again, and we certainly want to keep an eye on stocks that are showing strength. Also TK, similar. I don't know the difference between those two, honestly, but they are apparently different, but they're both popping in there today. SCU, a nice momentum location right here. Again, as we have this overall uptrend, massive gap higher, probably on some earnings of some kind, and really nice looking confirmation bar here. So there are pockets of stocks that are working and moving higher. This happens to be one of those here that is continuing that overall momentum. STLD is a steel stock. It's in a downtrend still, but maybe working its way back up in that upper direction. I'd be more cautious on stocks like this. What we want to see is we want to see stocks that are up in this range, or even up in this upper range. That's a reverse trend, so it's showing the counter trend, this being the trend zone. So we may see some sliding still on that stock, but it's been a big mover. So, and it's only got a rank of 90 right here. So we're not seeing a lot of real strong new buys in the list. The ranks, there's a handful of 90 ranks, but the rest of them are kind of down in these 80s levels. We want to try to stick with stocks that are in that upper 90 range. That'll do it for today's update. Everyone have a fantastic day.